The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. What I want to do here today is talk to you a little bit about a question that someone posed to me. Oh, we posted the chart for the NASDAQ. Let's try it again, Larry. The DAX. You'll notice that I posted the shorter term and the longer term. They're in a minor downtrends, as you can see right now. That's neither here nor there. But the one thing that I did want to do is answer these two questions. And I had to think a lot about these two questions. The first question that the person asked me was, what was my most memorable feeling good day in trading or in life, or you know, something like that? Yeah, my most memorable trade in trading. And then the second one was, what was my worst day? Well, you would think that my best day would be when my account was at the highest. That was actually my worst day, folks. It was 1973. It was my birthday, and I was standing in the parking lot of the Promenade in Beverly Hills. I had 7 figures in my account. I had 2 brand new cars. I had a couple of Rolex. I had every toy except boats and planes, which I've never liked. But I literally had every possible thing that I could want. And you know, I'm only 32 years old, and I had tears in my eyes. And the reason why is that I didn't have anything else to buy. And, you know, I don't know why. I remember I was leaning up against my new car, and I had tears in my eyes. What's going to happen? 9 weeks later, I owed Conti Commodities $2,700, and that was my worst day. Now, you'd think that my worst day would have been 9 weeks later in that October when, you know, my account went debit. It didn't even faze me. It really did not. I mean, I wasn't nervous. I wasn't upset. I knew I could make it back, but you know, that's neither here nor there. So anyway, we'll see. We'll see what that means. Anyway, remember, folks, this business we keep score with money, but believe me, it's not about money. It's not the old license plates that you see. The man who dies with the most toys wins. That is so much BS that you just don't want to have anything. You just don't want to have anything to do with something like that. You do your best work when you're trying to help other people. That's where the real enjoyment of life usually comes. That's my 2 cents worth. I'm going to get off the soapbox now, not bother anybody, and we'll see you know, what's happening. We have a question here about the Australian dollar this morning from one of our good folks up in the Northwest. It's going to be hit with a really bad winter storm up there in the Washington area. Well, no, I might not. I know I am schizophrenic, but I don't think I'm a psychopath. Anyway, this is the chart of the Australian dollar, folks. That's an hourly chart, but it's not. It's a pretty good trading opportunity, because if you look at the last swing that we're completing right now, up near this 78% level, that's a really nice ABCD, and you have the 135 pattern in there. So that's a really good one, you know, to see. See how things work. So we'll keep a really close eye on that as we're looking. Hey, on Friday, we're going to have a really special guest, folks. Adrienne Tilgray from Trading on Target. You know, she used to work with Van Tharp, and she's going to be talking to us about the psychology of stuff. And she's going to be doing a webinar also on the 15th of November. So that'll be a fun one too. No, 16th. No, 13th. Oh. It's early November. She'll tell us tomorrow, I'm sure. So we'll look at it. All righty, let's get on to these markets. Let's talk a little bit about something that I flat don't understand. Let me show you something. And then I'm going to ask Tom O'Brien about this, and probably Mr. Basil Chapman. This is the chart of Snapchat. You see when it opened IPO back at $30. like most IPOs, they're all hyped up, and then boom, down they come. And now we made a low around $11 in August. Now here's what's happened last night. The earnings came out for Chapstick. Wow. I think I better head off to the nursing home. Hold on. They started off for Snapchat. Okay. Look where it gapped down. The earnings were bad, or whatever. The earnings were bad. The people weren't showing up, whatever. And you'll notice that this thing went flat here. But look at this move between 6 o'clock in the morning, and this is a 15-minute chart. So in that 1 hour time period, it went from 11 to 16. That's a 50% increase, folks. What happened was a company, and this is what they've told us on Bloomberg, and that's what I was watching, is that a company in China called Tencent bought $145 million worth of Snapchat. That's $1 million, 1 million shares. Okay, now this is the overnight market. Now, can you explain to me why someone who wants to buy 1 million shares is going to buy them on the way up when the stock is in the sewer? Why don't he buy just 30 or 40,000 at a time? It only trades 11 to 12 million every day. I mean, that's silly. I don't understand this. This doesn't make any sense. And now it's backed off, to a 61% retracement where it's trading right now. That doesn't make any sense to me. That's why I'm really skeptical about some of this stuff that we see in the stock market with these ETFs, and things like that. I heard Jack Vogel, the guy from Vanguard, late yesterday talking about the ETFs, and he thinks that they're weapons of mass destruction. There's so many of them, he said, that they come out with, one thing after another, and people don't even look at what's behind them. So, we'll see what's going on. So, yeah, Chapstick would be a better buy than Snapchat. I don't know. Anyway, that's what I see in the stock market. It's much easier when you're looking at foreign currencies, folks. Okay, there you go. Thanks, Basil. I'll ask David about that. But Basil, do you have any opinion about that? Does that make any sense to you that someone would pay, buy 1 million shares on the way up and see the price increase by 50%? They didn't even do that on the IPO. That just doesn't make any sense to me. It really doesn't. All right. Yeah, we'll find out later. Amen. That's the understatement of the year. Okay, folks, let's get back to a couple of these things that we want to talk about today. We've got one that's getting pretty interesting. This is Treasury bond, folks. This one is this is getting so close. It's just really scary. We're up here now. We hit 154.25 last night. I am still waiting. I'd like to see it get to 155.04 is what I'd like to see. We're trading about 12 to 13 pips below that, and believe me, that could happen. But boy, that's going to be a real interesting possible short sale, because we're in a 10-day rally off of that 61% retracement on the downside, and that's the one that really is interesting. However, there is one even more interesting, and I'm going to share that with you right after the break. So don't stop listening, because it's going to be a real interesting one to look like. It's got everything that you could possibly ask for. The only question is, will I be able to find it on my desktop? That is the problem, and I think I will. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we've been asked to take a look at the copper, the red metal, over the past couple of weeks. As you can see, we had a Gartley pattern form here on November 1st. We had the ABCD structure coming down here to make a new low, which is in fact what it did. Looks like Mr. Z was buying down there at that 1.618 expansion down there at around the 308 level. 307.5, and now the $64 question we always ask is, what is the possibility of the market rallying, and what would be our first price objective? You're going to risk about 2 cents on this, I would imagine, and so if you're buying down there, you want to know what you're going to possibly look at as a potential profit. It's starting pretty good. We're trading at around 310 right now, up about 3 cents off the bottom. But if you'll notice the parallel channels that are there, all that basically is, folks, is equal moves that we've had. We had one back on the 31st to the 1st. The market moved quite a bit, and it's did the same thing between the 3rd and the 6th, and this is what we could possibly be looking at right now. So we'd be looking at about 2.5 cents higher between 312 and 313 is where it should possibly go to. Now, should it get above 315 or 316, then you're looking at a whole new ball game that you could be looking somewhere about 320. But your first objective, I believe, would be around the 312, 313. That would be an equal move from the 3rd through the 6th and the 8th through the 10th. That would give you into Friday or Monday. So they'd be into Friday probably. So that's what we would be looking at. That high we made back in copper at 322 is a pretty significant high, but it hasn't come down very much. It only came down about 14 cents in 12 days, so that's not much of a break. So my assumption is it's not going to, it's still in an uptrend without a doubt. But right now, if you bought it down there, you certainly would have your stop at break even, because you don't want to see it give up 3 cents. And, because now your risk would be a lot more, because you've already made 3 cents. That 3 cents at $750, that's in your pocket. You don't want to have to take that out of your pocket. So it's all about risk control. Remember that slot machine that we look at? It says nowhere on that slot machine does it say, you know, you have no way of beating me on a long-term basis, and nowhere does it say I've taken in $1.2 million more than I've given out. No, no, no. You got to think like a winner. A winner thinks, how much money do I have at risk? How much can I lose? A loser thinks, just like the slot machine, oh, look at all these red sevens and how much money I can make. They think how much money they can win, and that's the wrong thing that you want to do. Folks, every day for an hour and a half, I chat with John Jameson from the UK. It is the most interesting time of my day. I look forward to that more than any time of the day, other than eating, which I enjoy very much. But John he thinks differently than everybody else. He's just absolutely an incredible mind. He's always worked for himself. He's a propositional player. In other words, he looks for things like Brexit and, you know, things like the Trump administration win and stuff like that. And by the way, this is the anniversary of that. I have to tell you the story that night because Sarah, you know, being from Hong Kong, is interested in, you know, politics in the United States, how everything went, how everything goes. And she had heard about electoral votes, and she had a map of all the states. You know, a lot of the states we've been in together, probably about 25 or 30 of them, but there's some states that she'd never been in Rhode Island, Vermont, you know, North Dakota, Wyoming. She'd never been to some of those states. And so she wanted to understand, you know, where these votes were coming from. And so she started keeping score. And we stayed up the whole night watching it. And the key, of course, was when the election first results started to come back in, it looked like he was going to lose Florida. And that's when the Dow Jones dropped 800 points. That was the biggest drop we'd ever had. It succeeded the 777 drop during the too big to fail crisis. That was a big scam. But when it was limit down, and the S&P was limit down too, you know, it was time to buy. I got up to walk over to the computer to buy it when it was limit down. By the time I got to the computer, which wasn't very far away, it was already up 8 points. And when it got unchanged on the day, you knew that was a flat out win. But everything changed when the election went to Republican in Florida, and then as the other states, you know, just kept going and going, and it's been up it's been straight up for a solid year. In fact, we've made 58 new highs in the Dow Jones Industrial Average this year. I mean, that has never happened. Okay, let's move on. By the way, John Jameson is going to be doing a webinar for TFNN here on the 15th of November. Originally, I wanted to do these with him, but frankly, folks, after going through, listening to what he has to say, you don't need to listen to me. You need to listen to him because he thinks differently than everybody else. And that's what you want to do. You want to think that somebody who he can explain. Did you remember? This was amazing to me, and he proved it to me. You remember the old game show we used to have with Monty Hall, Let's Make a Deal? I remember my kids got dressed up for that, and they all went down there for that show. You know, trying to get on that thing. I took them down there to NBC. But anyway, you had to pick a door. Well, the deal was if you pick a door and missed, then you had 2 doors to pick whichever one you want. And you know that was set up, that was just amazing, because he would always say, now, do you want to change your original vote or your original choice? And no one ever did. The few people that did, they were winners because they knew whatever that choice was, he knew what the other side was going to be. In other words, they knew what thing it was going to be. It was just amazing how the statistics worked behind that. I mean, it was really just totally, absolutely exciting. It was really amazing. Someone's asking me if Johnny Carson was my client. No, I met him a couple of times, but the only thing, the associate producer of the Johnny Carson show, The Tonight Show, lived in Westlake Village, and his kids went to school with my kids, and so anytime we wanted to go to the Tonight Show, we went down. We didn't have to wait in line, and we didn't go very often, maybe 2 or 3 times a year, but no, I didn't. I met him a couple times, that was all, and of course I met Ed McMahon, but the guy that I knew more than anybody else was Doc Severinsen, and he was a really super nice guy. And anyway, I did know Doc Severinsen. Someone asked me another question on email last night. Who was the most, I might as well get this over with, who was the most famous actor that actually knew me? And this goes back to I hope I can do this in a minute, 73 in Beverly Hills. The E.F. Hutton office was right on the corner of Wilshire Boulevard where it splits with Little Santa Monica Boulevard. And they had a commodity department in there. They had the only ADP machine that would give you prices on a 5-minute to 15-minute basis. It cost $5 to get that, but you could actually see a 5-minute price of soybeans charted, a 5-minute price of wheat charted, and it was actually done by this ADP machine. And trading in that office with stocks and other things was Steve McQueen, and they had a little commodity room back there, and he would be there, and I was in there a couple of times, and I got to say hello to him, and I was known as the soybean man because I had made some money in soybeans, and he made some money in soybeans, and so I got to meet him about 6 times. I had breakfast with him a few times, but my most famous story, and I don't know if I can tell it now or not, but I had some Eli Lilly people there visiting because we were setting up the research facilities for cephalosporin antibiotics at Cedars-Sinai Medical Center. We were in the coffee shop of Little Santa Monica, and Steve McQueen came in, and these people went absolutely crazy. I had my back to the wall. He came up and he put his hands on my shoulder. He said, "Larry, who are these folks?" And I never did get over that. Live every day in an attitude of gratitude, folks, and I've been a one lucky puppy. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we want to take a look at a chart that really deserves our attention. This is the Treasury note chart. You'll notice here that we have that 3-drive pattern that stopped right near the 61% retracement. If you'll remember, the bonds made exactly a 61% retracement from the March low, whereas the notes went a little bit lower, down to 0.71. Folks, the difference between 0.618 and 0.71 is very, very small. It's almost insignificant for trading purposes, but this software is built to give you the actual, really thing to be watching. So that's what we really want to watch. I believe that we're at a really critical level here in bonds where I think we're getting ready to go a lot lower. Now, that's my opinion, and opinions are like armpits. So just remember that could easily happen. Now, we've just made a new high here intraday from yesterday in gold. I wanted to bring that to your attention to show you that we have nothing more than a ABCD pattern completing up there at that 1285 level, just a little above it. You'll see that's all we did was make and this is over the last several days. So that's not a bullish sign, in my opinion, folks. And if you take a look at the silver market, if I can find it, and I just did it, the $64 question is, can I find it? And you won't believe this, but I found it. I think I figured out why this is working. Are you joking me? Shut the front door and raise the rent. I might be able to get these charts up after all. Here we go. We'll take a look here. You see how weak silver is? Gold has taken out the high of the 7th, and we haven't even taken out the 618 of yesterday yet in silver. That's not a good sign. The second thing, what do you mean watch bonds for a TF short term? I don't know what that means, Mr. P. Would you mind explaining that to me? I don't understand the relationship between the Russell and the Treasury bonds. But anyway, if you'll notice that the silver is far, far weaker. The other one that is not acting really bullish for the gold is the euro. The euro is, had basically a 60 pip rally off of the 1.27 down there. So that doesn't make any sense. It's gold's ready to get out of its way here or not. But if we get above that, 1289 level in gold, I'll certainly change my mind. I won't chase it there, but I'll change my mind. I'm still waiting for 1220 to 1200 is what I'm still waiting, but whether that's going to happen or not, we'll just have to let the trading gods tell us whether that will occur or not. But anyway, those are the ones that were the main one, of course, are these notes and bonds. That's the one that, to me, really looks the most interesting of anything. Let's check and see how the market is acting this morning. We have a little bit of a pop that's given up already, it looks like. So that's about it. Euro's trading around 116. We got down to that 1.27 yesterday exactly, 115.52. We were able to rally about 50 pips. That's about all you're going to get. If you get above 70 pips in the euro, then that's a possibility that you're getting ready to move to the upside. But frankly, this old cowboy's got his eye on one prize today, boys and girls. That's the notes and the bonds. I can't stress to you enough that this is what you live for, Mother, God, and country. That's where everything lines up. So I don't know if it's going to work or not, but that's the one I'd really like, to pay attention to. Another one that looks relatively interesting from a shorter-term standpoint, of course, if you're looking to, fish for a bottom in something that has a chance, and that is to watch the British pound this morning, folks, because over the last 5 days we've had a little bit of rally, and now we're coming down to right near the 78% level that comes in around 103.75. We're trading at 103.90 right now. That would be a very, very low risk entry point there. You wouldn't have to risk more than about 30 pips, which is a very, very small amount of money to risk as you do this. So we'll see. Oh, by the way, I understand that Twitter has just increased their, what do they call those things? Pixels or whatever it is. They've gone from 140 to 280, and pretty soon they'll be at 560, and then everybody will be an author. But I don't know how they're going to be able to do it with that 280. That's an essay, for heaven's sakes. I have to make up a lot of things in order to get to 280 words. All right, let's move on here to the next one that looks a little bit interesting here. Yeah, hold on here. I've got to get this straight up and down. Otherwise, I'm going to get it all messed up. Gee, the biggest problem that when you're trading and you really want to do something like in the Treasury bonds is have the patience to wait. I mean, I can't tell you how many times I wanted to sell the bonds at 124.22, 124.23. I mean, and then it would go to 19 or something, and I'd get mad at myself, and then it goes back to 22 or 23. So what I do is I just take it off my monitor, I put the beeper on, I put my order in, and then I don't have to worry about it anymore. So that's what you have to do. And believe me, folks, the monitor is not your friend. Your monitor is your mortal enemy, because what it's doing is it's pulling out all the psychological information, imperfections in your personality, impatience being one of the greatest ones. And so don't watch the monitor. You're not going to believe this, what I'm going to tell you next, but it's the absolute truth. No one really cares what you're doing. Repeat that. No one really cares what you're doing, and they don't. So, why should you care? Just put the order in and see what happens. You don't have any control over it. It's all based on probability anyway. So that's the main thing. Okay, now we got a couple of minutes here. I want to talk about a market that has a potential, and I really emphasize the potential here, because this is what's really important. Let's just look here. This was a chart that we were looking at. This, that's right, Jim. Why me worry? Anyway, let's take a look here. At the weekly chart that we posted in the newsletter. We're looking for it to get up to this 157 level. We did. And what have we done since that time? We have gone sideways. We haven't really done anything. Now, this is important for two reasons. One, it is not giving you any indication yet that it's topped, has it? No, it is not. And has it given any indication that it's broken out? Yes, it has. So you want to follow it on a shorter term frame. So this is what I'm doing. I am going down, and I'll just show you right here, give you one of my secret things. And we'll put up here, this is the crude oil over the last yesterday's trading. You see we had a high at 57.70. Now, are we assuming that is the possibility of that weekly high? I don't know, but we've had lower tops and lower bottoms over the past 24 hours. There's no question about that. What I want to see is how it holds up against this 56.65 level. Well, why is 56.65 level? That's the gap of Sunday night. Now, if we fill that gap of Sunday night after this whole week of nothing, the top is in. And then the cat's out of the bag, and we're going to be going lower in crude oil. And there's enough news coming out of Saudi Arabia. I can't believe they killed one of the princes with a machine gun. Are you joking me? I mean, I can't believe that. These people are, they're relatives. There's really massive things going on over there. We really got to get Bill Meridian on next week, to talk about this, because this is really serious, folks. This is a major U.S. asset over there, one of our, closest allies. And if they're having trouble there, oh dear, that's not. And they shot rockets at the airport. Hello, that's not good. Anyway, we'll take a little break here. We'll get right back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, so since we're talking about crude oil, I said this was from one of our folks over in the UK, and also does business in Dubai. But this is a chart going back to last May. It shows the ABCD structures in the NYMEX. This is West Texas crude, of course, but you'll see that you have some really strong ABCD patterns measuring right up into this area of 157 to 158. So that's why it's important to watch this. The other thing that is not on this chart that we've brought to your attention before is that, and this is why ABCD patterns are so important, and they only work about 40% of the time when they're just AB equals CD. But if you add the time into it, in other words, if you look at the AB leg and measure it, and then look at the CD leg and measure it, and if that time sequence is correct, then it increases the probability to better than 70%. And this is what we have going here in this. So it's going to be real interesting to close on crude oil this week with 3 days to go, Wednesday, Thursday, Friday. If we close below 56.65, that is telling you that this is a false breakout in this crude oil chart, and that means that it's not a good thing. So that's pretty good. Hey, we got a caller on the line. It's Mr. Z from Philly. John, how are you?
Good morning, Larry. Thanks for taking the call. I wanted to just call and ask if you would like me to share with you just a fundamental read on the wheat market.
John, I will take anything from you that you have, pal, because there's very few people that I respect more than you in this business, and you know that is a true fact. So tell us what you have, my friend.
Yeah, thank you. We can see that Chicago December wheat is at 422. Mm-hmm. It's coming on down. I know you've been looking for viable patterns. I've been doing the same. So in that context, just wanted to share something fundamental with you. This Chicago wheat contract is clearly laying near lows. It had a strong rally in June and July that was driven by speculator money flooding into the wheat market. And one of the key catalysts last summer, of course, was that horrible drought that occurred up in Montana. Mm-hmm. And subsequently, all the wheat futures contracts have been coming down. Now, 3 things have been happening since. One, speculators bought the highs and are taking massive losses coming on down. That's number one. Number two, that hard red spring wheat crop up in the Dakotas and Montana, that crop was smaller because of the drought up there. But instead of the crop shrinking from 500 million bushels to 350, the actual crop came in at 400. In other words, the market had rallied too far up there on the Minneapolis contract relative to the loss of crop size. So we lost some crop, but it wasn't devastating. And now the third thing, fundamentally, is that Russia and Ukraine had a bumper wheat crop this past summer, absolutely bumper and massive. So here we are with this December contract trading near lows, and I just want to share with you and your listeners, and to repeat for myself, the cash market for wheat right now is down near $3.80 through most of the plains and the southern Midwest. So we've got a phenomenon where this December contract is still trading at a very large premium to the cash market. And this December contract comes up for delivery, then expiration within 4 weeks' time. And while I'm looking for buys on the Dees wheat contract, I'm also reminding myself that this thing can tumble, just like it did last year, into Thanksgiving to set a bottom as that futures contract came in closer to cash. So I just wanted to give you that background for those who are entertaining, speculating in this wheat contract the next 4 weeks.
John, that's great information, and I have to agree with you, especially on the cyclical implications of it, because there's a strong cyclical component for a November, December low in the wheat market. Now, I've posted the chart of the Minneapolis wheat in the room here today, and you notice that it held that really strong support down there for, about 6 or 7 weeks, and we've had a pretty good rally in the Minneapolis wheat, but the Chicago wheat is selling off, so there's a perfect example of where you're adding the fundamentals to it could, prevent you from losing a great deal of money. So this is the one thing you want to watch. If we get below 418 in the December wheat, we could easily see it drop another 20 cents, without any trouble. So I have to agree with that 100%.
Yeah, and I don't know where it's going, but I'm not going to be surprised by this Dees contract, the Chicago wheat, the ZWZ7 contract going either direction here. So I just wanted to share that. Hope that was helpful to you.
It certainly is, John, and always let us know what you're thinking, because you do. I don't know anybody that reads. You read incessantly. I don't know how you do what you do. But anyway, I really like your feedback, so please let us know things you're looking at. And your gold trading this week has been spectacular. My hat's off for you, so keep up the great work.
Can you lastly share with us on the E-mini S&P futures, the 2583 now, they're 10 points off the high. Mm-hmm. Is there some level that you're looking at under which, if we get below, suggest you strongly there's some more important trading high forming?
What I want to say is, what I'm going to have to say is, John, ask somebody who knows. these other markets,
I always ask.
Yeah, I've been short the IWM for several weeks. It's actually been working, and we've only had one day where it broke even against the position, but it's held up relatively well. But the NASDAQ goes crazy because of Amazon and Apple and all these things. So, literally, I'm doing so well in other things. I'm going to say wait till I see something that would tell us that. The only thing that I've seen this week is the fact that Dow Jones Industrial Average hit that absolute 1.618 expansion at 2550, right on the money. I think it went 2 points above it, and then back off 150 points, which isn't very much. But we've got to see a really bad day. I mean, they've got to scare somebody, and that hasn't happened yet. And it's got to be at least 300 points or more in the Dow. Now, that sounds like a lot, but that's nothing from this level. It really isn't. You stop and think that's a little more than, that's not even 2%.
Yeah, exactly. Thanks so much. I appreciate it.
No problem. Thanks for calling in, John. I really appreciate it. We haven't had a 2% drop in the Dow or anything else, I think, in about 6 or 7 months. That's the longest period we've gone without a without a correction. Now, maybe it's different this time. Frankly, I don't think it is, but we'll have to wait and see if that's going to be 100 points doesn't create a Dow panic, but who knows? The panics are created by the news, folks. You know, they're the ones that you listen to these people talk on these markets, and believe me, gee whiz, some of them, I wonder where they get their ideas. Probably from me. I don't know. We'll have to wait and see. Anyway, how are we doing this morning in the markets? We've got to take a little break here. We'll see. We've had a little bit of a sell-off here in the Dow. We're still heading down to the yen, down to that 130, 113.20 level, I believe. And what else? We want to watch this crude oil. If we get below 56.60, that was a low 65 Sunday night, then we've got a weekly reversal. And we'll be right back. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we started this show talking about Snapchat. I just want to see where it's trading in here this morning. I don't understand how that thing worked, but that doesn't make any sense to me, but a lot of things don't make sense to me, so we'll see. We're back where we were. We went all the way back down to 12, it looks like, and then we're back to 13.45, so it's pretty wild over there, but we'll have to wait and see how it ends up. I just don't understand why anybody would buy a million shares and pay a 50% premium on it. That doesn't make any sense. That's worse than an what do you call it? An IPO, for God's sakes. Now, since we've had the break here, we went up and made new highs in the Treasury bonds at 154.26. We took out yesterday's high at 154.25. This is the hard part of trading, folks. I want to sell it so bad that I'm glad the show is coming to an end so I can run over to Brewbaker's and get myself a nice little cup of decaf, and I'll sit there and talk to the old people about the old days and how things used to be, and we'll see what goes on, because I take a break here just to let the markets decide what they're going to do. I'm leaving my order in up there, folks, at 155.03 in the bonds. That's 11 ticks away. Doesn't take much to move 11 ticks, because we've moved 11 ticks here in the last 15 minutes. So I'm leaving the order setting there. In the Treasury notes, that order is 3 pips higher than we're trading right now. We're trading at 14.5. We wanted to get it to 18.5. So, and remember to use a CIC-FIW on that. And that basically means cancel it close if it doesn't work. Make sure your broker understands that. It's a very important order that works very well in markets when you're on the wrong side. That's a CIC-CFFW. That means cancel if close if it doesn't work. That's a very important order to use. Some platforms don't have that, but fortunately mine does. Anyway, we're going to have Adrienne Togaray on Friday. You certainly don't want to miss her. That'll be a really good one to listen to. So live every day in an attitude of gratitude, and may God bless.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
The